The S&P 500 is slowly but surely starting to change its market structure. We've hit the golden ratio, we're in this market stage of acceleration, and we have been now for 28 days. To me, that's a sign of a mature trend or a trend that at least should see some sort of a pullback or a correction in the near term. But for right now, we can't predict that. Across the board, the indices are green. If we come in to the market depth, this is what tells you a slightly different story. We've now seen the bull strength go from 35% down to 31%. When we see the bears take over, so this right side number becomes greater than the left side number, that's your official sign that, hey, now we see a market transition. But for right now, what we are starting to see is chop. 35%, 31%, a lot of back and forth. 32, 31, 30, 32. No real clear signal here. So what does that mean in terms of the S&P 500? Well, to me, very clear. We're seeing chop, so both buy and sell setups are very much valid. Let me show you that in ThinkorSwim charts. You'll see that both sides are receiving the type of attention with follow through that you would hope for. Here's the S&P 500, and this is from Friday's activity. Remember, a day in which we usually would expect to see funky things happen. And even on this day, we're seeing the S&P 7 to 8 a.m. Pacific hits our volatility box models and bounces right away. One unique thing that happens during this breach, we hit not just the cyan lines, but we also hit the at the edge setup. So you can see the slightly deeper volatility with less bullish conviction allows you to get a little bit greedier with your entries if you did want to with the at the edge setup. This is an entry at the outer edge of the clouds looking for a target at our normal entry of the cyan line. So a little twist, but a nice way to take advantage of this volatility. Take a look at the short side setup, which triggered in the final hour of the markets. For those of you that are bold and trade the final hour on a Friday. Same idea, we breach the upper volatility box models, and this time we see selling right at the clouds, and we see a very quick follow through in the same hour. This is rare. Think about this. This is on Friday, and we're seeing that the bears are very actively just taking profits at the volatility box levels instead of what typically on a Friday would happen, which is we see the bulls continue to rally through and hold above the clouds, suggesting a trend. So we are seeing the market start to transition here from a trending market into a choppy market. Friday was the first set of clues, and you, at least I think, you should see some gravitational pull towards that 1618 extension and eventually the market pulse, and I think 7230. I hope you found this video helpful. For those of you looking to make sense of this choppy market, here's what the breadth is telling us, and I think the breadth is your greatest clue of when the markets will actually transition to that bearish stage. Until then, we continue following what the markets are telling us. Take care, and we'll see you in the next update.